Welcome to Indian Market in Minutes, podcast from the Motilal Oswal Research Desk. This is your host Shivangi Sarda, and today we have a distinguished guest joining me for our special episode to understand what's in store for us in the upcoming July series. Joining me is Mr. Chandan Taparia, Head of Technical and Derivatives Desk at Motilal Oswal Research. Hello, sir. Thank you for gracing us.
Thank you, Shivangi. It's a lovely time to celebrate the Indian market at lifetime high. We were talking about 24 mein 24,000 and here it is. But again, question will be what's next? And for me, it seems that the journey is going to be very exciting.
Surely, sir. Now, for the viewers, today we will be covering rollover of the indices, technical and derivatives view, FII's activity, index actionable, sectors and stocks to watch out, and finally, some of the questions which we have received on our social channels. Now, let's begin. Nifty rollover stood at 76%. Bulls were seen in full action, and it touched a fresh all-time high. Well, it has surpassed the much-awaited psychological 24,000 mark. And now, what's your take on this?
So, Nifty June rollover is higher than its 3-month average of 71%. And it is also higher than the last 4 months. Nifty has total outstanding open interest of nearly 15 million. And longs are comfortably carrying to the next series as volatility is also falling. There has been an addition in the open interest by 5% along with a significant rise in price, which clearly indicates that bullish stance could continue in the market.
You mentioned about volatility, where I was going to come to next. This month has been one of the most important ones with the event euphoria and sentiment settling in for our market. India VIX closed the June series near 14 levels. And we've seen that Nifty put-call ratio also rose to almost 1.5. Now, what will be the interpretation of this combination according to you?
So quite interesting. India VIX declined to 13-14 zones after spiking to 32 levels during the event time. So because of that, earlier it created wild swing, but later it cooled off to close near its lowest band and comforted the bulls on Dalal Street. Overall, rising put-call ratio with falling volatility clearly indicates that bulls are dominating, and because of that, it's likely to have a smoother ride in next coming weeks.
Absolutely. So overall, I understand that option data now suggests a broader trading range in between 23,600 to 24,500 levels. Let's shift focus to Bank Nifty, where the rollover stood at almost 71%. Now, one of the questions that we have received is that Bank Nifty has definitely felt like a big FOMO. And we've seen a catch-up rally in this series. It's almost up by 4,000 points in the entire month. Now, what's next for this rate-sensitive index?
So rate-sensitive Bank Nifty has seen inline rollover. That's not great, but in line with its quarterly average. Because we have seen some short covering trigger in the last week when Bank Nifty crossed 50,000 zones. It has measured support near 52,000 marks. Until it holds above the same, we could see extension of the ongoing rally, which can take it towards 54,000 to 55,000 zones.
Now, moving on to the second segment, in the equity cash market, FIIs broke their selling stance and cumulatively bought equities worth 2,061 crores in the June month so far. DIIs have continued their buying stance of the last 13 months, and they have bought 21,975 crores in June so far.
So FI's long-short ratio and index future witnessed a complete recovery through the entire series. This ratio has moved from 12.8 to 18.7, and it closed near to the highest part. We have noticed in last 3 years that around 5 to 6 times, this ratio turns from around 12 to 14, and index witnesses sharp recovery. And this time, also it played quite well. So I believe that foreign players are back, and their short covering supported the Indian market to climb and scale to the new highs.
Well, this is an excellent take on our foreign players' activity. Now, going ahead with the index actionable, help us with the range and view for the July series.
So derivatives data and price setup suggests that Nifty index has to hold a key support of 23,750 marks for an up move towards 24,500 and 25,000 zone, whereas supports are placed at 23,500 and then 23,200 levels. One can also play the upside move, but again, we need to go with buy on decline stance, or we can go with positive to range bound bias, looking at the recent run up in this market.
Finally, talking about the sectors and stocks to watch out, positive stance was seen in most of the sectoral indices, mainly in the banking, which was the star performer. Adding to this was auto, metal, reality, and the IT sector. One of the most asked questions on our social media handles were that what are the sectors to be kept on radar now?
So sector and stocks which are showing strength would include cement. We have positive view on Grasim, India Cement. Positive price setup with better rollover indicates that momentum could continue here. In auto ancillaries, we have positive view on the battery and the tires. In tires, we focus on Apollo Tire and C8. Technically, consolidation breakout is clearly seen with momentum in the sector, and we also seen a surge in the trading and the delivery volume. Then one cannot miss power and gas, especially talking about Petronet, IGL, MGL, NTPC. Most of these sectors or most of these stocks have surpassed key level, and because of that, fresh breakout could drive the next leg of rally. I cannot miss Nifty Pharma and Pharma stocks. Selective pharma stocks are doing well, and here I would like to mention Dr. Reddy, which has seen the role reversal. That means previous resistance acted as a support and it started the next move. And last but not least, I'll talk about the reality and the Godrej property, which is continuously making higher tops, higher bottom formation on the weekly and monthly chart. And I think all these stocks will provide the alpha and has potential to outperform the market as well to cheer the market sentiment.
Thank you so much, sir, for these incredible insights. Looking forward to host you soon. Well, this is it for the special episode. Wish you a super series ahead. And don't forget to follow this podcast for your daily morning dose of the market. This is Shivangi Sarda signing off. Investment and securities market are subject to market risk. Read all the related documents carefully before investing.